The first main piece that is probably the biggest in the news is there's a line out the door. Lawsuits are happening like crazy right now, and the reason that is because the new statutes of limitations has changed. To simplify that, let's talk about the negligence. So what's happening is if you normally file a lawsuit in Florida, you have 4 years to file that. Well, that's no longer 4 years. It's now gone to 2 years. So the people that were preparing and assuming and like getting their medical bills and trying to figure everything out as far as their budgeting and if they should start the lawsuit, they have to do it now because if they hit that 2 year piece, they've run out of time. That's causing an influx of lawsuits. Now, that's only one piece of this two-piece section that's doing it. The second part is the amount that you can get back from an insurance claim. So if you hired a lawyer and you sued an insurance company, you could say, hey, you were deemed at fault. It's called the good faith or the bad faith policy, and I want you to pay all of my lawyer fees. With the old law, you actually had to show proof that the insurance company acted in negligence. They actually purposefully like scammed you or something happened, or it wasn't just something like they didn't realize. If it was just a common mistake, you were stuck with the lawyer bill. That's changed. They simplified the way that you can sue them and prove that it was a mistake. Now what was actually called actual malice is something that's called conscious disregard. So essentially where you had to prove what we just said, now it's a lot easier to get refunded for lawyer fees that you have going after your insurance company. Essentially, if the insurance company fails to give you the right paperwork, if they fail to do something in a timely manner, that wasn't something you could go after them for, well, now you can. The downfall, which actually appeases some of the insurance companies, is now there's a cap on what you can get reimbursed for. So before, where that law was allowing you to get unlimited, it didn't matter. If they defrauded you, you got hurt, you had economic loss where now you lost your job and all of these things happened. And all of these pieces were to play a factor. It could be a $2 million claim. Now they have to pay you back the $2 million. And if you could prove that they maliciously did whatever X, Y, and Z, they're going to pay the $300,000 lawyer fee or whatever you had. Well, now it's capped to $250,000. So yes, it's easier to go after the small to middle-sized claims, but for those of you that have large claims and you've gone past the 2 years, you're done. Also, if you have a larger claim than $250,000, that's it. That's all you can go after the insurance company. Now, that doesn't change what the claim is. If you have coverage for a certain scenario and they deem that to be the insurance fault or they're not paying correctly, they're going to have that come out of your insurance policy. So if you had $1 million coverage, most likely they're going to have the insurance company pay that $1 million coverage. But then after the fact, you had the malice, the economic loss and all that stuff, you can get up to $250,000 back, assuming that you win that lawsuit. The fourth and fifth thing that you should be aware of is if you're more invested into homes in Florida. So if you either own a home and rent it out, or you have a multifamily home and you're the owner, well, now what Florida has deemed allowable is that if you aren't being responsible to take action or to do the research, the due diligence, as we call it, against their tenants and finding out the background and who's living there and whatnot, you could be held liable where you weren't before. Essentially, the old policy was if, let's say, a crime happened and the landlord wasn't aware of the person, they passed the background check, all of that happened, but they rented the place to somebody that shouldn't have been there, right? It's hard to say. It's kind of another lawsuit that could happen, but essentially that happened and someone got injured, something happened, whatever that case was. The landlord wasn't liable for that. That was not their fault deemed in the law. Well, that's changed to now, if they don't do their due diligence, having people live in certain locations, then they have a liability lawsuit that the landlord has to be protected for. So if you're a homeowner and you're renting out the home, or you have a multifamily property in Florida, you may want to look at your insurance policy and say, we might want to up that just to be safe, especially if you aren't taking those extra steps to do the background checks to make sure that the person renting the location isn't going to cause an issue. Now, I said the fourth and fifth because we mentioned the 2 year to 4 year situation. We mentioned the ability to sue your insurance company. Now, also the cap is technically those are the same. And then we mentioned the difference of owning multifamily homes. But the last piece, the fifth piece, is something that you won't see in this bill. It's actually something that's a little bit separated. What they're trying to do, this is a future thing that you may want to think of, is Florida is also trying to get rid of what's called a full replacement cost roof. The easiest way to think of that is the way that insurance is set up now is if you have a claim on your roof, you have what's called an RCV, the replacement cost value of your roof versus you have what's called an ACV, an actual cash value. Think of it like car insurance. Car insurance, all insurances is actual cash value unless you have a classic car or some special policy, right? So the car deteriorates over time. 20-year-old car is worth less than a brand new car off the lot in most cases. So that actual cash value is just whatever the value of the roof is today. Replacement cost is essentially giving you the full value of what it would be new, so you don't lose a dime in that scenario. In most states like Michigan and Ohio and Virginia and all of these other states usually offer an endorsement to add the full replacement cost. Well, in Florida, it defaults with full replacement cost. It's a benefit for you, but there's a little extra cost that you're having built into that. Given the choice, 9 times out of 10, you're going to want that full replacement cost. But what's happening is the insurance companies are losing their shirts, especially with fraud and contractors and the cost that it is to do these roofs. So there's a little bit of a battle happening to where not only that, the state, it has an old law that says if your roof is 25% or more damaged, then it's a full replacement. There's no question about it. So they're thinking of moving one or both of those out of the play to where you can do an actual cash value. Sure, it makes it cheaper, or it at least levels out the insurance a little bit for you. But now if you have a claim, you're going to have to run into you paying a lot more out of pocket. So a $20,000 roof, you might end up paying 3, 5, 10, or even 80% of that entire bill. This is being fought by the contractors and everybody else because they don't want this to go through. If this happens, there's 2 problems. One, your insurance guy is going to have a lot more headaches, and I'll explain why. It's not just about that. But 2, the roofer is going to get a lot less business because they can no longer charge the large fees because the consumer can't pay that much. So they're charging that full 100% value, 100% cost. Let's half upgrade if we can squeeze it in. And that's where a lot of this fraud is coming from the roofs, which is causing companies to leave the state altogether. The problem for the agent is that the agent is worried about what's called E&O, errors and omissions. Because if this law changes, at least until everybody understands it, everybody adopts it, and they're essentially would make you sign a form that you understand that your roof is actual cash value. Well, now that's one more piece of work that the agent has to hire a whole staff to do. They're figuring all this out. And if you have an independent agent, they don't control any of that. So if something gets missed, if the customer just doesn't like the way it is, guess what? They're going to sue the agency. If you know anything about lawsuits, that 90% of the time, it's not even who wins the lawsuit. It's the cost to protect yourself. And so in those cases, these agencies are going to have this increased errors and omission costs, so their bills go up, and essentially it's just going to cause havoc. Will it be a solution for a long-term solution for an issue that's happening today? There's a good chance. Let me know what your thoughts are. Leave me a comment below. Should they necessarily change the law where the 25% roof instantly gets replaced, or should they allow the insurance companies to default your current policy to an actual cash value, allow you to purchase a full replacement cost if you want it? Whether you like it or not, it will default that way. And if you don't make the change, you're going to have the lower option of the 2. Let me know what your thoughts are. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.